Good morning, everybody. This is Dennis Wilburn from the Active Trend Traders, and joining me, as he usually does on Friday morning now, is David Grandy from All About Trends. Hi, David.
Good morning, Dennis.
And
good morning, everybody.
And so I was just saying, David and I chat just briefly before we get going on Friday mornings about what's going on with the market and how it's kind of crazy right now. But the thing that's very interesting, and I agree with both David and Harlan's philosophy, that the market is made up of, it's not so much a stock market as much as a market of stocks. And we were kind of laughing a little bit between us that what I was seeing on some of the charts were more bearish type trades, and Harlan and Dave were seeing bullish trades, right, David?
That's right.
And kind of amazing. And the thing about it is, what's really cool is we were both right from that aspect. And even if we weren't right, we knew that our systems would keep us out of trouble and protect our trading capital. That's what I really like about trading these kind of systems, David.
Yeah, exactly. We're just simply trading what we see, and we're buying stuff close to support, and we're shorting stuff close to resistance. So, if the trade does go against us, our losses are kept very small.
Yeah.
We're not chasing things as they're breaking out. We're not chasing things as they're breaking down. We're just letting things come to us.
Yeah, and and the other thing is we're not in a real big hurry to make a trade. They're not trade recommendations as much as trade observations and letting people know here's how we're going to trade it. We're not in a real hurry just to throw something out there just so we'll have, just so we can say, oh, we're trading something. Because that's when you do that kind of stuff, it's a real quick way to get yourself in trouble.
Exactly. I mean, we did one trade in 17 trading sessions
Yeah.
the last 2 weeks of August and the first part of September, because we just didn't have the patterns yet. And we talked last week about how we had to be patient and let things come to us, and this week things came to us, and yesterday we initiated 4 trades. So because they came to us and they started triggering, and so that's the beauty of the systems. It brings the market and stocks bring you in and they take you out, and it's not, oh gosh, we got to do a trade, we haven't traded in a while. It's no, we do a trade when the chart tells us to do a trade.
Yeah, and and then I follow a slightly, like I like to do growth or income generating type covered calls. Those of you who caught our webinar on Wednesday night, just doing these little base hits, picking up to $150, $200, $300, $400 every once in a while, every week, using our weekly covered call process is basically the way I've been going almost since the beginning of September, and I'm very pleased with that because those trades have worked out really well. I want to remind everybody that all materials we present here is for training purposes, and traders should always paper trade when you're learning a new method. So let's get out here and get going. I want to remind everybody again, Dave and I got to keep flashing this sign up here probably until the end of January. I'll probably take it out and then repurpose it a little bit later. But Dave and I are going to be on the road next year. Money shows, one of the first big shows we're going to do, and it's the days of February 4th through the 7th back in Orlando. If you know anybody in Orlando, if you're down that way, please come by and say hi. The other thing is we love to talk about stocks. I think that many of you who have sent me individual emails, I am pretty good at, I'm darn good at answering them, or sometimes people give me a call and we'll chat about a particular stock and a particular entity. And I know David does the same thing. Don't you, David?
Absolutely.
So what we're doing, okay, just take a look at, my question is still the same as it was last week. Are we rolling over or not? Last week, our highlight was basically low momentum rally, finally broken, question mark. And what's really funny is that as I was typing in what was new for the S&P, if you'll take a look here, what was new for the S&P last week is the same as it is this week. From high to support and back to resistance, will it hold? Same thing on the NASDAQ, pullback or rollover. Even the Russell showed a little bit of strength this week, but I kind of compared this week's action. I think the IBD Big Picture said it best yesterday. One can make a case for a bearish scenario, one can make a case for a bullish scenario, which gets back to where we started the conversation. It's all about individual stocks and understanding whether you're in a tradable rally or a tradable correction. And so I think the market right now is a little bit like, it's like the Dutch boy who had his finger in the dike, and if he's not really careful, when he pulls his finger out, we may get some capitulation to the downside. Again, that is what I'm seeing in the charts, but at the same time, it can be very constructive, and so let's talk about that right here. Last week, if you recall, here's one of my favorite charts. This is basically the percentage of stocks above the 20-day moving average on the NYSE. We get our low back here in August, the first part of August. It bounces back up to the older bot area, and is since last, we were sitting about 65 last Friday, and now we've continued to move on down. What's very interesting, the anticipation is that we will get a move down here into the end of September or the first part of October, and then we'll start building for that rally that tends to happen sometime in the mid-October, November timeframe, and we can fluctuate and jump around here. But this has been, especially the lows, have been some very accurate predictors of when the market is going to bounce. And as you know, with this August bounce, this bounce from here to here on the market was considerable. It was about 10%. And so if you're trading the leveraged ETFs, that 10%, if you're trading the 3 times the leverage, that 10% could be about 30%. So let's look at Tesla. No, I'm not going to look at Tesla right now. How about the S&P? S&P. So the S&P, we are basically right back down to, guess where, support. However, the question is how constructive is this? What are we seeing? Yes, it's holding support. However, the momentum finally has broken through the 0 line, but it could still be constructive because if we do get a correction at this point, look, we've got great support there at the 50, and so we also have the support that it's at right now. It could go no lower, it potentially could go no lower than that. But the question I'll ask on this one, and one of the things that I'm pondering, is are we getting a form of a rounded top? And typically, if we are, we'll look over here on the weekly chart. If we do get a rounded type top, typically the correction from a rounded top is a little bit more severe. I know some of my other trading colleagues were sitting there going, what is holding this market up? To keep it from falling over. NASDAQ 100, it has so far been the strongest of the indices that I personally track, and as you can see, it is holding right in this little trading range from about 4,050 up to 4,100, and it's just been bouncing along. It too, is it forming, putting in a rounded top? it maintains and continues to be stronger than either the S&P, the Dow, or the especially the Russell, and it hasn't given anything, any signal whatsoever to say I'm bailing out, I'm heading for the exit. Hasn't done that. The Russell. The Russell is a bit of a horse of a different color in that if the other indices do in fact, if the indices do, the other indices, the stronger indices do in fact roll over, I would anticipate that the Russell may break down through the 50 and we may get a retest back down here in the 1100, but we do have this upsloping line. You can see it very well on the weekly chart coming up through these lows. So this was a higher low here, and so that will provide one level of support, but also we've got support here at the 200-day combination. A downside that I see, David, though, is on, not a downside, but potentially a little bit of a negative here, is these attacks, these assaults on the 50-day moving average. It now has it rolling over, and so eventually what often happens once the slope starts to change, price action will come to it, and eventually it slips with the slope. And so, anyway, that's what I'm seeing on the Russell. We did do a real quick partial put play on the TNA that we opened yesterday, and unfortunately didn't get as much profit as we wanted to on it, but it was a profitable trade because we took profit on a partial portion of that right as this approached and got back into the support area that it's found, that it's basically stopped at for the last 1, 2, 3, 4, 5 times. So David, that's what I'm seeing in the indices. Again, I think that it's correct to say we can make a case for the market going either direction. And with that, let me see what, with that, are you ready for me to switch control? And so,
I'm ready.
Okay, and folks, we will take a bit of time. David and I have an appointment this afternoon that we're going to, that so we won't have a lot of time to look at stocks, but when you're, some of the stocks you want us to look at, just basically type in the stock ticker and tell us whether you're long, short, looking to get in, and if it is a stock that you're already in, let us know where you got into it so we can give you a better assessment. With that, David, whoops, I gotta push the right button here.
Okay, well, thanks a lot, Dennis. Yeah, so I don't spend a whole lot of time on the indexes just because I'm more focused on leading stocks. And last week, I was more in the camp that you're in, Dennis, right now, which is, we can make a case either way because we had just as many stocks on setting up short sell setups as we did long side setups. This week, the leading stocks are, the way they're talking to us, it's more about the long side, and that's just from what we see. But like I said, it is, and you said, it's a market of stocks, and we're both just simply trading what we see, and we can both be right and maybe differ short term on the indexes. So it's just, there's lots of times where good successful traders are both long and short at the same time, and because we're just simply trading what we see and we know what we need to see, and it's a market of stocks, and some stocks are beating to their own drum. They're trading to the beat of their own drum. They're going to set up short sells, and there's other stocks that are setting up long sides. So, but I'm just going to make a little bit of a case for the long side. Last week we talked about, is it pullback time, and we were starting to see that, and this week definitely that's the case. The answer to that is yes. And there's two ways indexes and stocks pull back. The first is via price, which is what we're seeing with the S&P, and The second is via time, which is more of a sideways flat range, like we're seeing in the NASDAQ right now. And these orderly pullbacks are creating opportunities for us that like to buy leading stocks at low risk entry points. So I'm going to go through what we're seeing with the indexes and the leading stocks. So just a quick review of our trading plan. We don't chase stocks. We let them come to us. We buy support and sell resistance. We short resistance and cover at support, and we're just simply trading what we see. And there are times, though they're rare, where we don't do a whole lot of trades. It's not because we're lazy or anything. It's just because we're just not, seeing anything, and our mantra is only the best and forget the rest. And if we have to squint to see something, it's probably not there, and it's not worthy of investing and risking our capital. So we did have a little stretch there where we just didn't have a lot, but now we've got a lot going on. We issued 4 new trades yesterday, and in the 24 hours since we issued those trade alerts, we have a combined gain of over $400. So that's a pretty good start. And so let's talk about the indexes real quickly. The S&P, you can see it's trading in a nice trend channel here, and it's pulling back off of the resistance at the upper end of the trend channel in a fairly orderly manner. Could continue to pull back towards the 50-day, but very nice and orderly. Not really seeing any problems here. The same thing with the NASDAQ, just trading sideways. The only thing that's a little bit interesting is that there's a pretty wide range in the trading range each day, so that can be a little bit unnerving, I guess. But we just try to encourage our subscribers to take a bigger picture perspective here. And when you look at it from this bigger picture perspective, it's up and down every day, but we're just simply trading sideways, and that's constructive, that's bullish. And how long we'll continue, we don't know. Nobody knows. But what we do know is there's a lot of good setups that are taking place. Some are triggering, and others are really close to doing that, and we're ready to go, and we're going to be prepared to profit from those. So in the market, there's 3 things you need to know: uptrends and how to trade them, downtrends and how to trade them, changes in trends and how to trade them. And last week we had both upside or uptrend patterns to look at and downtrend patterns. This week it's pretty much all uptrends, and the most common uptrend patterns that we trade off of are pullback off highs, stocks that are in clearly defined uptrends above the 50-day moving average, and have formed an orderly low volume pullback to areas of support. So here is EQT. You can see it's been in a very nice uptrend. It's formed this nice cup with handle base, if you want to call it that, and it's pulled back in a very orderly manner here towards the 50-day. There's also lateral support down here in the $90 range. Stochastics are short-term oversold. So all the things we look for are right here, and we're just looking for that break above the pink line to initiate our trade. Very good pattern here. The second pattern we use with uptrends are trend channels. Stocks, again, that are in uptrends, and we draw a line connecting the lows of the uptrend channel. That's our support. We draw a line connecting the highs of the uptrend. That's our resistance. And we're just looking for stocks that are pulling back towards trend channel support. And here is Celgene, and you can see a very nice uptrend channel here. Clearly defined support, clearly defined resistance, and it's pulling back to support at the trend channel, which also is close to the 50-day moving average, as well as some lateral support here. So you've got 3 levels of support that it's pulling back towards, which we always like to see. The more support, the better, because that makes the pattern stronger. Again, stochastics, short-term oversold, and we're just waiting for that break of the pink line to initiate our trade. And it's really that simple. And then after the trade is initiated, it's just all about managing this overall trend. So we're just looking for stocks like this that are trading in nice, predictable patterns that are giving us an opportunity to buy at a low-risk buy point, which is near support. And then once we're in, we just simply manage the overall trend. As long as it stays in an uptrend, there's no problems. So it's really that simple. That's all we do. Buy support, sell resistance, back and forth, so on and so forth. The this pullback is creating a lot of opportunities. We've already taken 4, and we've got a lot more on our watch list, and we're just simply trading what we see. We'll take the trades as they trigger, and then we just simply manage the trend. Nothing really else to say about that. It's really that simple, and we're just doing what the charts tell us to do, and we'll let the indexes and let the talking heads on TV talk about all they want and what this means and that means, but we just look at the charts and do what the charts tell us to do. So if you want to get on board with us and see what we're doing here, we have a 15-day free trial. You just go to our website and sign up for that. There's no credit card or anything. Just tell us what email you want our newsletter sent to. You get everything that our paying subscribers get for free for 15 days. That's a newsletter every trading day, a newsletter on Sundays. It's a little bit of analysis on the indexes and then analysis of leading stocks. We have a pretty comprehensive watch list. When stocks on our watch list trigger trades, we send out trade trigger email alerts. We tell you exactly what we're buying, how many shares, what price, and we do the same thing when we're locking in our gains or if we were stopped out. So it's really easy for you to trade in tandem with us, and doing so with the education and the knowledge of what you need to see to take a trade and why you're taking the trade. We spend a lot of time going over these patterns and explaining how they work and what we need to see to take the trade. So it's pretty simple. Anyway, that's about all I have, Dennis.
It takes me a second to get myself off mute, David. And so good, awesome. You know, I've learned a lot from both you and Harlan, and hopefully you guys have seen some of the things that I do. And either one, he's crazy, or I was just doing a little bit of chatting with Harlan, typing it in, and you know, sometimes we do see the market slightly differently, and that's okay, because I think that you know, from both avenues we bring, you know, a lot of really great nuggets for our subscribers, that they can go, oh, okay, I see that, and it's not a matter of being right and wrong as much as it is we give our subscribers, especially those that are subscribing to both services, a mosaic of the potential of what can happen. So do you agree?
Exactly, and there's times where we have short sell trades and long side trades at the same time, and we get some emails, you know, how can you be short and long at the same time? And the answer is simple. We're just trading what we see.
Yep.
And it's a market of stocks, and some stocks are in downtrends and other stocks are in uptrends, and it will always be that way regardless of whether the overall market's in an uptrend or downtrend.
Yeah, exactly.
Stocks are stocks.
Exactly. Yeah, so, well, I don't know if you guys can hear my alerts. Could anybody hear my alerts? It sounds like either I have a submarine klaxon if a stock is diving that goes off on my. So did you hear those alerts, David?
I did not.
Okay, good. But anyway, while you were speaking, David, I was this was going off in my head, in my ear, in my headset, and what it was connected to. We've had a continuing a little bit. It looks like the acceleration, the sell-off in the S&P, may be accelerating. Excuse me, but it's right at that level of support. So we'll see if we'll bounce there today. And we'll get going with concluding our discussion. The active trend trading system, guys, we do Wednesday night training webinars for our members to basically teach them and show them how to trade the market in any condition. We have training slides and trading videos available on the site, and we find it important to help people understand what to trade. And we trade only high-quality IBD growth stocks and or some of the leveraged index ETFs, especially the 3 times leverage like TNA, TQQQ, and the like. But it's always good quality stuff. We show people where to enter, where to exit, what strategies to use, what to expect. So far, since we began our timing service on the 1st of June, and this should say through through September 12th, which is today. We've been able to close this amount of trades, and currently we just closed out one of the TNA trades this morning. We had a long put, October 77. Didn't make a lot, but it was an income generating trade, so it's great for the week. The other position is open, and we're still holding Tesla. And so lately, David, we've been hitting a lot of little base hits on a weekly basis, or even a monthly basis, and then occasionally we get these home runs like we're getting right now with Tesla. And Tesla has been a gift that continues giving over and over again, and we're really enjoying trading the Tesla weekly options. And so here's basically a little bit about what our premium service does, our basic service, where you can find us, and where you can find the recording of this session. And I was just sharing with David as we were getting started, we're doing the back testing on a longer term ETF, power ETF strategy. Those of you know my trading colleague and my research colleague Mike Traeger is diligently going back over about 12 years worth of data so that we'll be able to offer new trade triggers, but they're going to be basically for the longer term investor who would like to trade either the straight the straight index ETFs or the leveraged, and it's going to be an ideal type of process for those who have restrictions on their 401ks about the number of times they can trade. But that's what we're working on. We're constantly working on something. So with that, I'm about ready to open everything up to for discussion and to check out additional stocks. And Harlan, are you there? Gosh, I hope this last time. Harlan, I'm going to take you off mute and just see if you have a couple of words to add. And you are off mute, my friend.
I am here. Yeah, I got nothing to add really. I mean, I think we pretty much summed it up. Sometimes, that's just the way it is. There's great markets to the upside, great markets to the downside, and then there just is. And that's kind of where we are right here, and it's just a matter of how is it going to sort it out. If it sorts it out to the downside, there's a lot of nice support down there. So, maybe it's just a bit of in-flight turbulence.
Yeah.
And if that happens, all we're going to do is watch our stocks and let them tell us what to do, if anything. And that's really all I have to add to it.
Yeah. I am finding that a lot of price action is respecting horizontal, especially horizontal levels of support and resistance, and then probably secondary respecting the moving averages. And are you guys seeing that also?
Absolutely.
Okay. So if one's going to be strategic in planning their trades, those are the strategically identified kind of like benchmarks of where you can start to look at, okay, maybe I can lay in a trade here, there, at the moving averages, at the support and resistance areas. And like you said, sometimes they work, sometimes they don't, but that's the way seems to be what the market's trying to give us right now.
Yeah, the beauty of those trend lines, trend channels, support, resistance, they help keep you centered to what is actually happening versus what some guy is saying on TV.
Right on.
That's why it works. It's worked for us for, gosh, as long as I've been doing this, it's worked. So, and that's going on over 20, 30 years.
Yeah, and I know it's worked even longer than that, Harlan, because if you look at McGee and Edwards, book on technical analysis of trends.
Yeah, that too.
They've been drawing those lines on charts for, gosh, probably pushing 80 to 90 years or longer. So with that, folks, this is going to wrap up the recorded session. I want to remind everybody, have a great weekend. Hope you enjoy some college football, pro football, or if you don't like those kind of things, find something you do enjoy. And try to spend a little bit of time this weekend reviewing your watch list, checking out the videos. And so remember, keep growing the egg. So from Dennis, David, and Harlan, folks, trade wisely, trade profitably. We'll see you next week.